Okay, for lecture 4, we're going to discuss some of these concepts, these market profile concepts. And we're finally getting to an area where you, you're learning the basics and you learned how the profile, gets formed, different structures, different date types, different openings. Hopefully you're studying that so that we can really get rolling here. I really have to show you what those concepts are first before you can really start putting it all together and understand what's going on. So, today we're going to start looking at some of these concepts of trends, excess bars, poor highs and lows, a prominent POC, one time framing, profile repair, pullback low, and so on. And what I'm going to do is I'm just going to scroll through the charts and point these things out and show you how things react to that. Okay? So, here's a snapshot of a pullback low. And you can see the market traded that day, and in C period it came up. And then and this usually happens about 2 o'clock, the market makes a pullback low. Okay, and that's it. And, the market attempted to go higher, had a pullback low, and, that's where buyers try to keep the market up. And, they're long there. So what happens is once you break a pullback low, all those buyers are trapped short. And you can see here, the next day it opens up, and there's your A period. And you break the pullback low, and look at your A period. Look at it. Your A and B period all the way down. An example of a good area to take a trade would be the break of a pullback low. So that's what a pullback low looks like, and you can see them. You can see another one up there. Okay. Pullback low. Okay, here is some one-time framing, and you've got a fairly decent, what's called a prominent point of control. And a prominent point of control just means there's a lot of TPOs there. Price crossed that level many, many times, and it really stands out. And then you begin one-time framing on an intraday trend there. Higher highs, higher lows. Price then gets extended from the point of control. You got a poor high, and the poor high represents that buyers were willing to buy there, but there were no sellers up there, meaning the sellers are lower. And then you can see that happen here. The sellers were, up in this 31 area, and then that was it. It just tanks out. Okay, let's take a look at trend and intraday trend. So here's a good example of you have a higher high and a higher low from the 22nd to the 23rd. And then, the market can't get in the range of the 22nd, and so it trends up. So you've got a trend there. And you can see later on this trend carries through after it consolidates a little bit and makes a 3-day balance, meaning, you've got value higher, the market likes it, and then it takes off. Okay. Let's talk about profile repair. Profile repair, let me see if I find one for you here. And you can see, got nice profile repair somewhere. Profile repair would be basically, well, here's a fair example of it. Uh, you've got a sloppy looking profile here. You got a lot of single prints. You got one time framing down. And so you don't really have a good Gaussian distribution. This would be an example of good Gaussian distribution. And so the market has to come in the next day and fill in how sloppy the market traded that day. And that's just called profile repair. An example of a poor low and poor high, and the market takes them both out. And a poor high and a poor low simply mean it's not aggressive. It runs out of buyers are trying to push it higher, but there's no sellers there for the buyers to buy from, so they just liquidate. Here's a good, nice little excess bar. You're up near the high. The close of the rotation closes below the open of the rotation. Beginning of a new intraday mini auction. Directional change. A little bit of profile repair there. Sloppy trading. Market the next day tends to make a Gaussian distribution. Spends some time there, fills in all the trades. You break the low a day and it's gone. And you're down the whole next day. Here's example of, see if I can find a good high. All these are poor highs. So, the market is going to come back and revisit that. It'll revisit a poor high or a poor low because it's not aggressive. If I can find a nice aggressive, some nice aggressive selling. See, I have all these untouched VPOCs marked up, and so as the market's traded down, it's left a lot of up targets. Example of a good high you can see for a couple of days. Here would be a good high. It's aggressive, A period, initiative selling. Price comes back up, they're selling again. It's aggressive, it's a short. That's a good high. And it takes a while for it to come back and test a good high because they know there's big sellers there. And that's initiative activity there. Here's an example of a poor high. Buyers try to move it up. They can't find any sellers, so market comes down. And then it gets some profile repair right in here. Here, this Gaussian distribution repairs and makes a value area and repairs some of this sloppy trading there. Example of the market repairing this these two rotations at the end of the day, L and M, spending some time making a value area there. Once the market establishes a value area, it can move higher. Example of a 5-day balance, right there. Example of a 5-day balance. Market participants accept the value of the market, and they come in and move it higher. What I do to mark up my charts is I mark up all the VPOCs, the virgin points of control. And these are basically targets. So, because as the market moves from balance to imbalance and back into balance, it can do that on a single day. As an example, here, the market moves out of balance and then swings back up in the afternoon back into balance. But it can also happen on a very large scale. So you can see the market has like a 5-day balance here, and the untouched VPOC is this 1885.25. But look at all the targets up here. The next target that has any balance is from way back here on the 6th. And that's an untouched value area, and the market looks like it's going to move back up here to test this area value and go back into balance. And so, I mark these because it gives me, the up targets or down targets. It gives me targets that the market can go test. The market's heading down, but it's leaving up targets in its wake. So it'll go retest them. Whereas you see like here, the market makes a value area, and the very next day it tests that point of control, and it can't get through, so you're going to get trend down, which you do, see? Because it's already tested it. It didn't leave it. This day did not leave this VPOC untested. It tested it and said the value is too high, and so they moved the market lower. So that's a nice way to, put it all together for a market analysis. Is, to understand these terms and get to a point where you just glance at a chart and go, poor high, good Gaussian distribution, sloppy profile. I may get profile repair there, 5-day balance. These will all become second nature to you. Here's an example of market came down, tested this point of control, and that was it. It went back up. Couldn't get below it. There starts your trend. So I hope that helps you out a little. And we hope to move on to Lecture 5. So hang in there. We'll get there.